Hey guys, Chris from Adaptation here, and this is video number 3 of my PoA multiple choice prep for the CSEC July 2020 exams. If you've missed any of the previous videos, I'm going to put a card up there and a link in the description below so you can check those out whenever you have a chance. And hold on, before we get into today's video, I just want to say, if you are finding the content helpful, please be sure to give that like button a click. And if you are not already subscribed, I'm not sure what you're waiting on. So be sure to subscribe and click the little notification bell so you know each and every time I release a new video. And of course, if you think anybody else would benefit from this content, please feel free to share this stuff, okay? All right guys, so without further ado, let's get into the work for today. All right, so we are taking a look at this question, which is entitled number 20. Now, just by the way, guys, these are not from a specific PoA paper or a CSEC paper. I went through about 12 years worth of papers, and I even went through stuff before that, and there are a lot of repeats. So I created my own questions based on those questions. So let's take a read, and of course, yes, be sure to read your questions before jumping into them. All right, so let's go. So it says the double entry system of accounting is best described as a system where. Okay, so they want to know what basically, how would you describe double entry? So is it a system where special books called journals are used to record transactions? Well, we know in our bookkeeping process, journals are the first line of entry in bookkeeping. So you have your sales journal, purchases journal, the two returns journals, your general journal, as well as your cash book. But with the exception of the general journal, which has a debit and a credit column, and the cash book, which has a debit and a credit side, the other journals don't have debits and credits. They have an amount column. So I don't think this is the best answer here. Let's check out B. Accounts must have two sides. Well, that will facilitate double entry, but that doesn't tell us what the double entry system is. All right, C. Each transaction must be recorded with at least one debit entry and one credit entry. That might be where the money is. I think that's the answer there. And D, there are specific books for specific types of transactions. Well, that more speaks to the journals, to be honest, and it is not a very good description at all of what double entry is. So C is definitely the best answer here. Oops, let's highlight it in yellow so we know what we've done. Cool. All right, so let's scroll down a little bit and we'll take a look at number 21. So it says, which of the following concepts is the basis of the double entry system of accounting? This is interesting. So it's a concept that is the basis for double entry. So we talked about prudence or conservatism in my previous video. Again, if you didn't see that video, I'm going to put a card up there and a link in the description below so you can check out that video and my discussion about the prudence concept. It's very brief. The accruals or matching concept, that discussion should be in the same video as well as the consistency concept. The dual aspect or dual nature concept. So this is the answer to that question. And I mean, the words kind of gave it the words. Like, for example, dual and double, they're kind of close. Now, sometimes that kind of relationship could be misleading. But what the dual aspect or dual nature of accounting is like this. If an owner puts in, let's say, 10,000 into the bank, so we know anytime the owner puts anything into the business, that's capital. And in that case, capital is increasing. So we would credit the capital account to record the increase in the owner's capital. Simultaneously, bank is increasing. Money is going into the bank, and bank is an asset, so we would debit to record the increase in that asset. But note, the 10,000 that went in was simultaneously capital and bank. So that's what the dual nature of accounting is. Items, amounts of value are simultaneously, in most cases, two things at the same time. That money that came in was both capital and asset. If, let's say, for example, we borrowed money from a bank, we took a loan to the tune of $50,000, and the money that we borrowed went into our bank account. So if money went into the bank, bank is increasing, which means the bank is an asset, and when assets increase, we have to debit. So we would debit bank for $50,000, and at the same time, we would also credit the loan account, the loan from bank or whatever it is, because we've borrowed that money. That money was borrowed from a bank. And anytime we borrow money, that's a liability. And when liabilities increase, we have to credit the account. So you see that one amount of 50,000 was simultaneously an asset and a liability. Okay, all right, so that is the answer to that question. The dual aspect or dual nature concept is the concept that underlies the double entry system of accounting. Let's check out question 20. So I'm going to scroll up a little bit and then we're going to take a look across here. Okay, so Cake Han Limited owes E&B $200 and settles its debt paying by check. settles its debt paying by check and receiving 10% cash discount. Which of the following shows the correct entries to record this transaction? This is interesting. So K Khan owes A and B $200. So that's a debt. Now, this is, by the way, this question should have said in the books of E and B. Let's put that in, right? In the books of E and B. And I actually should have said A and B, right? If you have been doing any past papers, you might recognize the sound of that name, K Khan and A and B. Wink, wink, nudge, nudge. Anyhow, so let's see. So K Khan owes E and B. So K Khan is a debtor to E and B, which will have a debit balance in his or her account. When the debtor pays off that balance, it's negated. It's going to zero. So you would have to credit that account. So you're going to credit K Khan $200. So if we take a look here, we're seeing one item that says credit K Khan 200 and debit bank 200. So is that the correct answer? Well, remember, there was a 10% cash discount, which means discount allowed is going to be involved, or is going to be one of the entries involved in the recording of this transaction. So if we take a look here, we're seeing two options with discount allowed, one up here and one down here. Discount allowed is an expense, which means you're going to have to debit discount allowed to record the entry of discount allowed. So this one down here shows a credit to discount allowed, which shouldn't happen unless you're correcting an error. So this one here seems to be the best answer. Because what's happening? What does a discount do to the amount that we actually receive from the debtor? It decreases it. So if we go back up here, there was a 10% cash discount, and that's a discount offered to our customers to encourage them to pay quicker or earlier rather than later. What was the amount owed? 200. What's 10% of 200? That's 20. So 200 minus 20 is 180. So we are actually getting $180 from K Khan. A and B is getting $180 from K Khan. So that's going into A and B's bank. So you're going to debit bank for 180, debit discount allowed for 20, and credit K Khan for the full 200. And the sum of the debit entries matches the sum of the, credit entries. All right. So option B is the correct option here. Boom. All right. Now, once again, if anything I've explained kind of goes over your head, or I have explained it too quickly, or you think you want a different explanation, please feel free to message me in the comments below. Chances are somebody else also may feel the same way, and you asking may help not only you but them as well. All right. And if I make a mistake in any particular aspect, please feel free to let me know. Right? I don't put in mistakes on purpose for you to tell me stuff, although that is a nice way to start a conversation, right? I do honestly make mistakes sometimes, but I'm okay admitting that, right? Oh, we didn't take a read here yet. So ABC deposited a check, for 500, right? Received from Ms. Tia Marie. Which of the following entries are required to correctly record this transaction? So ABC deposited a check. So ABC's bank is going to go up. Bank is an asset. To record an increase in an asset, what do we have to do? Debit or credit? We have to debit. So we're going to debit bank. A as the first option. So 1 has to be there. So the only option without 1 is, why do I keep pulling that? Right. The only option without 1 is B. So B is out. So it's A, C. Well, I don't think D would be involved. D has 4 entries. But let's see. I mean, the previous question had a transaction that required 3 entries, 2 debits and 1 credit. So it's not impossible. But let's take a look. So I don't know if I told you guys this hack, right? This hack with double entry that works for most simple transactions. It doesn't work for adjustments or closing entries. It works for simple transactions. So my hack is credit where it's coming from, debit where it's going. What is it? It is value. Where is the value coming from? Wherever it's coming from, you give credit to that entity, that person, that account. Wherever the value is going, you have to debit that. So you can credit where it's coming from, debit where it's going. Credit where it's coming from, debit where it's going. Don't make that into a somewhat and make TikToks out of me, eh? Don't do that. We go fall out. Why did I give you the idea? Anyhow, erase that in post, eh? If you leave it in, you're fired. Am I talking to myself? I guess I am. Okay, so we deposited 500. It came from Tia Marie. So if it's coming from Tia Marie, you credit Tia Marie and you debit bank. Credit where it's coming from, Tia Marie, debit where it's going, bank. So you credit Miss Tia Marie and your debit bank. So 1 and 3. That seems to be option C. All right, cool. So let's take a look at question 24. So it says, a chef starts a catering business with $25,000 worth of cooking equipment. What are the correct entries to record this? So a chef starts a business. So the chef is the owner. Whatever the chef is putting in, that's going to be credited. And what is the chef putting in? Cooking equipment. Equipment is an asset. So to record an increase in an asset, you have to debit. And like I said just now, credit where it's coming from, debit where it's going. What is it? The value. Who is putting in value? The owner. So the value to start the business is coming from capital. So you credit where it's coming from. So we have to credit capital. And where is the value going? It's going into the business, but specifically where? What is being introduced? What asset? What resource? Cooking equipment. So you have to debit cooking equipment. So you credit where it's coming from, debit where it's going. So you credit capital. So we have a credit to capital here and down here. Up here it says debit bank. Did we put money in the bank? No, we didn't. We put, not we, the chef put in equipment. So you have to debit equipment. So D is the correct answer here. Right? So once again, credit where it's coming from. The value to start the business came from capital, and debit where it's going. It's going into the equipment account. Okay? Let's go again. Number 25. So a business owner inherits a building which he decides he will use as his new business office. Okay? So the owner is bringing in a business into, the owner is bringing in a building into the business. Okay, so which of the following entries should be used to record the introduction of this asset into the business by the owner? So they're telling you something here. The owner is introducing an asset. Anything the owner introduces is going to be recorded as capital. So what is being brought in specifically? A building. So where's the value coming from? It's coming from the owner, which means the capital account has to be credited. So you credit where it's coming from. It's coming from capital. Where's it going? Well, the value is going to building. So you debit where it's going. Credit where it's coming from, debit where it's going. So we're going to credit capital. So there's only one entry, one option here with the credit to capital. We didn't even have to read the rest of them. But always be safe. Credit capital, debit building, we're good to go. All right, let's take a look at question 26, shall we? In Mr. Chin's, oops, I don't know what's right. All right. So in Mr. Chin's ledger, there's a debit to the drawings account with a note in the details column saying cash. Ooh. So this is not a straightforward one. So they're telling you in Mr. Chin's ledger, wink, wink, nudge, nudge for the name. There's a debit to the drawings account. Now, drawings represents a reduction in capital, any resource the owner is taking out of the business. So if when the owner is putting in resources, that's capital increasing, which requires a credit. If the owner does the opposite, as in taking out resources, you're going to have to debit to record the decrease in capital. So it says that there's a note in the details column of the drawings account that says cash. So the details column in a T account tells us the other account affected by the transaction. So this is saying here that there was drawings to the amount of whatever, and it came from cash. Because remember, if the drawings account is debited, the other account involved is credited. And you credit where it's coming from, credit where it's coming from, debit where it's going. So we credited cash because money clearly came from cash, and the owner took it out, which means that there's a debit to drawings. So I think hold on, what is it? I didn't even finish with the question. What is the entry recording? So is it recording the introduction of more cash into the business? No. If it was, cash would be increasing as would capital. This is not that. The owner is taking out resources. The deposit of the business's cash on hand into the bank account. No, that's a contra entry. That would be taking money from the cash and putting it into the bank account. Money is coming out of cash for the owner's personal use because the drawings account is involved. Here, the withdrawal of cash from the bank for business purposes. If it was for business purposes, the drawings account wouldn't be involved. You would have the bank account saying cash on the debits, on the credit side, on the debit side of cash, it would say bank. So D has to be the answer. The withdrawal of cash from the business by the owner for personal use. There you go. Let's go again. So this double entry stuff is kind of interesting. So it says here, in the accounting records of I Can Sing, there is a debit to the drawings account with a corresponding credit to the purchases account. What is this entry recording? This is a lovely one. This ties up even Form 6s, because a lot of times I think certain things are glossed over when we revise. We don't pay attention to specific things unless our teacher drills it into our head. So there's a debtor drawings, which means the owner took resources for his or her own personal use. And we credit the asset that is being withdrawn. So if we credited cash, cash is coming out. If we credited bank, we're taking money out of the bank. If we credited equipment, machinery, the owner will be taking that for his personal use or her personal use. But we credited purchases. What is purchases used to record? The purchase of what specifically? Stock. I heard it say it. Yeah, there you go. Right, very good. So when the owner is taking out stock for his or her own personal use, we debit drawings and we credit purchases. So I wanted to burn that into your brain, because that comes almost every year in the multiple choice that I have seen so far, almost every year. And I have seen that come in the paper. Well, you guys will have a paper too, so you don't have to worry about it. So if anybody's watching this after 2020, make sure you know that particular double entry for the withdrawal of stock by the owner for his or her own personal use. Debit drawings and your credit card and your credit purchases. Right? So basically what's happening, we are crediting purchases because a credit to purchases would decrease the purchases balance, which would in turn decrease the cost of goods available for sale. So let's say you bought 50 items and the owner took out 5. So you're going to have 45 left. So when you initially purchase the items, you would have debited purchases. Let's just say this is the debit side. I'm not sure which side you're going to see it on, right? So what has to happen is if the owner takes out 5, right, it's going to have to come down. But we know we don't really bring down stuff. We put up an entry on the opposite side of the T account to counterbalance it. So that's what's happening here. So this is showing the credit purchase of stock. No, that would be a debit to purchases and a credit to the creditor or accounts payable for stock. The credit purchase of stock from the owner. What? Whatever. The withdrawal of stock for the owner's personal use. Yep, let's go with that one. This is an error. Purchases should never be credited. That's one to catch some of you who feel smart, who are really not sure what you're doing, but pay attention, all right? Okay, guys, so I have just a few more questions here, and my first batch of multiple choice stuff will be done, so now I have to go and create some more for all, right? Let's take a look at question 28. What is the double entry required to record when the owner takes stock for his or her own personal use? Okay, so this is the same question asked from the other side. So as I mentioned in one of my previous videos, the papers like to do this. They'll ask you, what is the definition of, let's say, accounting? And they'll give you options. And then in another question, they'll say, accounting may be defined as, and they'll give you characteristics and say, okay, which one of these fits the definition? So this is like what I'm doing here. I'm giving you from different perspectives, the same question from different perspectives. So what is the double entry required to record when the owner takes stock for his own personal use? So what did we say? Anytime the owner is taking anything for his or her own personal use, you have to debit drawings and you credit the asset that's being taken out. Now you might say, well Chris, we're taking out stock. Why don't we credit the stock account? Because the stock account is only used to record opening and closing stock and the correction of errors. That's just the system. We use the purchases, sales, returns in and returns out to record movements in stock. Primarily because sales and returns in are at selling price, whereas purchases and returns out are at cost price. So you can't mix two different types of costs in the same account. Well, until you get to the income statement, but that's a story for next time. So we're going to be debiting drawings and we're crediting purchases. We're not crediting sales because we didn't earn any money. Right? 29. Which of the entries below are required to record when the owner pays for his or her own electricity bill using the business's bank account? So, what's going on here? The owner is paying his or her own personal electricity bill using the business's bank account. So, essentially, the owner is taking money out of the bank for his or her own personal use. So, the drawings account is definitely going to be involved. So we're definitely going to be looking for a debit to drawings, which is item 3. Now, electricity expense. If we were paying the business's electricity expense, we would definitely debit that. That's fine. But we aren't paying the business's electricity expense. We're paying the owner's own. And remember, if you all recall, if you all watched video number 1, which you could find a link to in the description below, or maybe a card up there, we talked about, was it video number 1 or number 2? I think it's number 2, sorry. So you can find, I talked about something called the separate entity concept, which is where the business is considered a separate legal entity to the owner, and as such, its records must be kept separate. The business's records and the owner's records cannot be mixed up at all. So what's going on here? The owner's taking money out of the bank for his or her own personal use, so you have to debit drawings, and credit bank. So that's 2 and 3, which is option B. Okay, so number 30, last question for today's video. The owner of a business wanted to buy a motor vehicle costing $150,000 for her own private use. She only had $125,000 and so transferred $25,000 from her business's bank account to help her purchase the car. Which of the following shows the correct entries to record this transaction in the books of the business? So this is very, very similar to the previous couple of questions, the drawings aspect. The owner is buying a motor vehicle. That's the and it says specifically for her own private use. So that is not going to be a debit to motor vehicles for the business. So that is not involved. Money is coming out to the bank, so we have to credit bank, and the owner is using it for her own personal use. So you're definitely going to have to debit drawings. So let's take a look. So we have a motor vehicle and bank here. No. Credit to bank, yes, but not a debit to motor vehicle because it's not the business's motor vehicle. Once again, nope. I don't know. Oh, sorry, it's in thousands. Oh, that's why. So money is coming out of the bank. But how much is coming out? The owner transferred $25,000. Well, there you go. This is the only entry down here that has the $25,000 coming out of bank and then going into drawings. Okay, guys. All right, guys, so there you have it. That was about, I think, 11 questions that we did from number 20 all the way to number 30. All right, so I hope you guys learned something today. Once again, if you have any questions, please feel free to leave them in the comments below. I love hearing from you guys and answering your questions. You can also find some of these questions again on TikTok and Instagram. I'm going to try to create more questions, so there'll be different ones in different places, so make sure and follow all the socials. All right, guys, so I'm not going to do a long outro today. So you know my story, right? You guys can do anything you want to do. You can be anything you want to be if you have the correct mindset, a growth mindset, and you put in the work. You cannot get away from that. It's hard work, right? Along the way, you are bound to face difficulties and have trouble, and it's okay to ask for help. And if what you are doing isn't working, then you need to try a different approach to it. You need to adapt because change is the only constant. All right, guys, thank you so much for watching. Don't forget to like, share, and subscribe. And until next time, I forget what I was going to say. And I'll see you next time. Bye-bye, guys.